Hi there, it's Tracy. So I've been talking with a bunch of buyers lately, and just kind of talking to them about, their dream of home ownership. And something that's kind of been coming up is just what is the cost of buying a house? And so I just kind of want to talk today about just what is that involved. I know you probably hear it a lot of just, closing costs, down payment, but what does that mean exactly? So I just want to break it down a little bit. So typically, depending on your credit score, you would need to have somewhere between 3% and 20% down. It also depends on if this is a primary residence, if you're a first-time home buyer, and like I said, what your credit score is. So, 20% is kind of what is needed to not have to pay a premium mortgage insurance or a PMI. That's an additional fee that would be tacked on to your monthly mortgage payment for whatever, for any down payment that is less than 20%. Now, once you get 20% in equity, then that PMI payment is removed. So just kind of keep that in mind. Unless you're doing a USDA loan, the absolute lowest that you would see for a down payment is going to be 3%. So you figure if you're buying a $200,000 house, your minimum down payment is going to be $6,000. If you're buying a $400,000 house, the minimum would be $12,000. So in addition to down payment, you're also going to have closing costs. Depending on what it is that you are doing within your loan. If you're paying cash, your closing costs are less. If you are buying a house with a HOA or a CDD, a community development, then your closing costs might be a little bit higher. So it totally just kind of depends. The homeowner's insurance, that also plays a part into what the closing costs are. On average, we typically use 3% as kind of standard closing costs. Now, something else that can play a role is if you are a first-time home buyer and you're using some form of down payment assistance, whether that be maybe a state bond, a county bond, your closing costs are actually going to be a little bit higher. So, and that is because there's usually one origination point that is part of the closing cost. So while you're getting this free money, it is going to cost you. So it might, it may still be helpful to have that money, have the down payment assistance, but it's something to consider that let me say it this way. It is worth running the numbers to figure out if the down payment assistance truly helps you. Because sometimes you'll have a higher interest rate, you'll have the higher closing costs, but you do get the benefit of having the down payment assistance, which is typically on somewhere between, I've seen, $5,000 to $15,000. So hopefully you find this helpful. But so just kind of as you are dreaming of home ownership, think about the costs and make sure that you're saving up the right amount. Now, in a buyer's market or in a non-super hot seller's market, it is possible to get closing costs. We've gotten that for buyers before. We are not afraid to ask. Doesn't mean that you will necessarily get them, but so obviously seller's closing cost assistance or state bonds, all of that can help alleviate some of that upfront that you need. But just to be on the safe side, if you are thinking of home ownership, I would consider putting aside about 6% of the amount of house that you are planning on buying. That way that should cover the majority of your down payment and the majority of your closing costs. So I hope that this is helpful. If you have any questions at all, please feel free to reach out to us. My name is Tracy Prantner with Adventure Group Realty, and I am located in Orlando, Florida. Have a great day.